Hello friends, this is Vivek Bajaj, your friend, your guide, your mentor and your well-wisher. Friends, you know that we have been doing this series called Face to Face series where we have been trying to cover few very normal people who are doing incredible abnormal work in stock market. Some people I have met in my experience, my journey of last 3-4 months of recording these videos, and I tell you that I am a different person, I am a changed person. Today I am in a lovely city called Chennai, and I have met, it has been my honor to meet two very good people who are active traders in the market, and they have absolutely amazing fan following. One of the person I recorded recently and I have shared the video also in YouTube, and now I have another superstar of market who has really come up well in last 3-4 years of his active trading career, at least in the public domain. We have with us Jagan. Hi Jagan, how are you doing?
Great, how are you?
Very good, very good. So Jagan, we met today, and you told that you also were one of the participants in the event which we did 2 years ago. It's such a great feeling for me to interact with you today in this forum, knowing that you were also a participant and you enjoyed that experience of learning and knowledge sharing which we had a couple of years ago.
Yeah, true, yeah.
So Jagan, I've been following you on Twitter, and I've been following your work, and I'm thoroughly impressed with the approach, the attitude, the willingness to give it back to society, teach people the right way of looking at the market. And I've seen you sharing in your Twitter a lot of trade ideas as well, which I believe you practice on your own. So that's the best way to share your experience with people, and I think Twitter has done incredible work, given all of us platform to share our honest knowledge with people. So that's how we got connected with you, and that's how a lot of users are connected with you, and they wanted to know more about you, your story, how it started, how you have evolved. I believe you also come from a very humble background, so everyone wants to know about you and see if they can become the next Jagan as well. So tell us about you before we get into the nitty-gritties of markets.
So 6 years back, I was a typical software engineer. That's how I started. And I became a reader by accident. Okay, so by birth, I'm not a reader. So I'm not coming from the family actually who used to read the books regularly. So by accident, I became a book reader. So that's how I started reading a lot of books. So one of the book I read is actually Rich Dad Poor Dad. Okay. So written by Robert Kiyosaki. Okay. In that book, actually, what he mentioned, he mentioned something like 4 quadrant. So in which quadrant you wanted to be, you can read the book, you will come to know. So in order to make money, we have to be an entrepreneur. Okay, that is the only way we can make money. Right. Okay, so by being an employee or being a self-employment, actually you can't earn a big money. So that's how I started. Then I came to know that actually to become an entrepreneur, right? So we need to do some business. So what business will suit us? So that's how I started. In fact, I started 2 to 3 business which did not work out. Right. The final one of which I came here actually is the stock market. Right. Okay, and I'm coming from the family actually wherein actually my father is also not having an account with the bank. Right. So think about actually stock market exposure. So whenever I watch the news, if I see any news in stock market, we used to change the channel. So we don't have any exposure to the stock market. That's how we started. So but once I read the book Rich Dad Poor Dad, so a lot of things to learn from the book. One of the main thing he said is actually we need to spend a lot of money to the education. So we need to go to the seminar, workshop, CD, whatever things we are to learn, that we need to get it. So we should not look at the money. It's an investment. It is not expense. Okay, that changed actually. If you look at me actually 6 years before, if you ask me to take a Xerox, I will encounter a lot of shops where the cheapest one is available. That's how I was. Okay, then I spent money to go to the workshop. In the workshop, I listened everything about the cash market, option buy, option selling, future trading, everything. Okay, and one thing which attracted the option selling is the trainer. Okay, he is not active trader actually. He is actually teaching what is option, what is high, what is low. That's what he teaches. He clearly mentioned that a lot of fund managers and big boys sell options. Okay. I am coming from the background actually of rich dad poor dad student. Okay, so Robert Kiyosaki student. He clearly says that actually you need to copycat the rich people. So I decided actually I will sell options. So when I decided to sell option, that time I don't know, there is a short strangle, short straddle, adjustments, Greeks, expiry trade, right? So those things I don't know. The only thing I know is actually big people sell options. That is the only key information I had. So based on which actually I decided to sell options. Right. Within 3 months of time I came to option selling. So I did not go to cash market. I did not go to the futures option buy. I straight away came to the option selling. And then I met Mr. P.R. Sundar after 3 months of time. Right. So I met P.R. Sundar and I asked him actually I am deserved to sell option. He was really surprised actually within 3 months of time, how did you come to option selling? Right. Because when people come to option selling regularly, they come to option selling after 5 years or 6 years of time, because they try everything, and when things are not working, then only they come to option selling. Right. Okay, so but I came to option selling just because of my thought actually. Big boy sell options, I wanted to sell options. Then I learned a lot of things from the option selling. That's how I came to stock market.
Fantastic. What a lovely story, and I'm sure a lot of users would resonate with his story, because he comes from that background which is quite a varied background, which is quite a specific background where a lot of people are from. A lot of IT engineers who are working in a software company now trying to look at stock market as a full-time career. So you could probably, or you probably are for some people, role model where you have shifted your occupation from a software engineer to a full-time trader now. So option selling is something which you adopted, and what a lovely reason for adopting it, because you knew that the resourceful people, the rich people in the market are selling option. That's why they are rich. But I'm sure that only 3 months of option selling understanding would not have given you an immediate success. So tell us the journey, like when you decided, great, that was point number 0. But today when you are standing at say point number 10, what was the journey at every level?
Okay, so once you become an option seller, right, so you don't need to be super brilliant to make profit, because actually your success rate is already 80%. So you sell any options in option selling, 80% of the time you are going to be right. So that's how the initial success is based on the natural process of option selling. But if you take the same thing with the option buy or future, the initial process, you need to go through the tough process. But option selling, that time actually the market was silent. So initially 3 to 6 months actually I was making profit, and market was not that volatile when I was selling option. So I clearly making profit, and once the market is little bit volatile, then I started learning little bit. Okay, so but to be very honest, actually in option selling only one time actually I made a huge loss. Okay. And other than that, actually in my 6 years of career, actually I never made a big loss. And only one time I made 5% loss in my life.
Oh, wow. So your track record is quite impressive, because generally people say that in option selling every month you can make 5% to 10% return. That's what people say. But there will be 1 month or one Six Sigma event which will wipe up quite significant portion of that earning of last few years. But if you are saying that your drawdown in a particular month was not more than 5%, it's a great achievement.
Even in an entire folio, actually, I will not have a 5% drawdown.
Fantastic, fantastic. I think all of us want to learn from him. Even though I've been running a prop desk with so many traders, but I think this will be quite a valuable video learning for them. So tell us, how do we all do this? How do we arrive at a consistent profit zone for an option selling?
So in option selling, generally how people come, they try a lot of things and then they come to option selling. That's how most of the people used to come. They try cash market, future option, buy option selling, they come. Okay, so once they come to option selling, what they generally do, they sell a naked options. Right. Okay, they sell a call and they sell a put. Right. And for the retail people, option selling is equal to short strangle, nothing else. Okay, and some people will do the short straddle, that's it. Yeah. So they think that actually option selling is nothing but a short strangle, and short strangle will have the highest pop. A pop is nothing but probability of profit is going to be very high, and they get a confidence. Anything you do for 1 month of time, you get a great confidence. So that's how, because if the market is less volatile, or if market is going to be range bound, even it is a trending market, if it is slightly up, slightly down, you are going to make a profit in short strangle.
Right. Okay, just holding you, because I'm going to keep on asking you question in the middle also. Can you please explain strangle for our use?
So strangle is nothing but you are going to sell out of the money call option and out of the money put option. Okay. And most of the time, say for example in Nifty, if you sell options 500 points away from the spot, say for example Nifty is going to be 11,000 and 11,500 call you are selling, and then 10,500 put you are selling,
Right.
and most of the time you are going to be right.
Right.
So out of 12 months, actually 10 months you are going to be right.
Right.
And but one or 2 months actually it is going to be trending. That's how you are going to make a loss.
Right.
Okay, but people will not look at that. Actually, people will look at the quick result. And when you look at the quick result, actually for 1 or 2 months, actually if you are making profit, they think that they are really talented. That is why actually I used to tell the trader, if option buyer or a future players are making a profit, they can always raise the collar.
Yeah.
And if option seller is making a profit, you are not supposed to raise the collar, because you are not making profit out of the trend, or you are not making out of profit out of any view. You are making profit out of the time decay.
Right.
It's a natural process. Okay, but if option buyer or future players are making profit, it is because of their talent. Okay, and anyway, actually if you make a profit, you feel that actually it is a talent, and then actually one day actually you will have a hit.
Right.
So one of the first reason you need to understand in option selling is actually, and big boys never sell a naked options. Big boys never do a short strangle. And I'm going to ask the question to the retail people: if you are having 100 crores, will you sell put option for 50 crores and 50 crores call option? You will never do it, right? So, but when you have a 10 lakhs and 20 lakhs, you do that.
Right.
So, the first thing you need to stop the unlimited losses actually. First, never ever do the naked selling.
Right. Right. So if you are not doing naked selling, then can I presume that means you are doing ratio trading?
No, it is not a ratio trading. Ratio trading is also naked selling.
Okay. Okay.
Okay, because say for example, you buy one option and you sell 4 options,
Right.
still 3 options are naked.
Right.
So I mean, ratio spread is not a naked selling.
Okay. So how do you define a strategy which is not a naked selling in options?
For every sell, you need to have a buy.
Oh, okay. Okay. So it has to be 1:1 then.
Correct, 1:1.
Okay. So when you say that ratio, it should not be more than 1:1. I mean, you can't do 1:2, 1:3 because your net exposure still remains there in the market. The moment you do 1:1, you are to a certain extent hedged in the market, right? Can you please explain with an example?
Say for example, actually, Nifty is 11,000,
Right.
and then 10,500 you can sell, and 10,200 or 10,100 you can buy.
Oh, okay. So you are actually buying out of the money option and selling in the money option. That's interesting.
And selling is option is for business, and buying option is for insurance.
Oh, and you are ready to pay a small premium because you are buying out of the money options. So you are ready to pay a small premium as an insurance. If anything which is extraordinary happening in the market, you are at least protected with that extraordinary. But you know, typically I have seen the retail investors, when market goes in their favor, the option which they have bought, typically they sell it off at a profit, and the option which they have sold, they retain that sell position because they feel that now I have made money, so I can take that risk of selling the option. Do you think it's a good strategy?
No, I don't think so.
So when you execute these kind of trades, both have to be squared simultaneously?
Yeah, when you enter also, you need to enter the same time. When you exit also, you need to exit the same time.
Right. So again, just take an example. The market today is say 11,000, and market based on the analysis, and I'm going to get into that how do you do that analysis, what will happen to the market, because the first thing required is to make an assessment of where the market is going. But let's say example that market is going to go to 12,000. That's my analysis. Now how do I play with an option with that?
You need to sell put.
I need to sell put. Okay. So you will always look out for a sell opportunity. You will not buy call?
I will never do that.
Okay. So typically you will sell 11,000 put or 10,500?
It's based on the premium.
Okay. And each strike price has unique premium?
Yes.
Because every strike price has a unique implied volatility, so that's why the premium is unique. You want to just quickly touch on to this, that why premiums is different for different strike price?
It has to be right. So because actually the distance is matters actually based on the volatility, and based on the expectation, the premium will be different for each strike price.
Right.
And how much danger it is. Say for example, the option which is very near to the spot is highly dangerous, will have the higher premium.
Right.
The option which is far OTM will have a less, vulnerable to the movement, so it will have the lowest premium.
Right.
So we need to choose the appropriate premium and sell options.
But how do you define that appropriate premium? Is it something which comes from experience, or is there any cheat sheet for that?
Actually, it came from experience, but when I analyzed myself actually, how I am looking at the premium, this is how I look. I mean, my internal feeling. Okay, I analyzed myself, what I found, and say for example, in high weeks, you will get a better premium for OTM. In low weeks, actually, you will get a premium only near to the spot. Okay. So I always concentrate on the premium. This premium I choose based on the return expectation, based on the ROI on the margin.
Okay, okay.
Say for example, Nifty, if the margin block is 1 lakh rupees,
Right.
and your return expectation is 2%,
Right.
so wherever you get 2% return, actually go and sell it.
Oh, that's an interesting formula. Yeah.
Because actually, sometimes back, actually, I was having a formula of 25 rupees, 50 rupees. So for Bank Nifty, I had 50 rupees. Right now, I moved to 70 rupees. Because it based on the return expectation out of that strike price.
Just want to clarify this point, friends. It's a very important and very unique perspective he's giving. Typically, we always look at the quantum of option premium which we are investing or which we are getting. What he is adding to the perspective is that he's saying that look at the margin requirement for that underlying and see the price of the premium and see whether it is giving you that kind of a return on capital which you have deployed, and accordingly you participate in that premium. That's a very interesting perspective, friends.
Actually speaking, option selling is not a trading. Option selling is a lending business.
Right.
And you are lending the money for interest.
Right.
So say for example, some people will say actually, Jagan, you are selling for 25 rupees, 50 rupees,
Right.
and what is the profit you are going to get? But the thing is actually, say for example, for Nifty it is 12 rupees is 1%.
Right.
If you sell options for 12 rupees,
Right.
it is 1% ROI on the margin you are paying.
Right.
And say for example, you are selling options for 60 rupees in Nifty,
Right.
and you are getting 5% for the margin you are paying.
Right.
So it is highly dangerous, because any business you do in the world, if you are expecting 5% on ROI,
Right.
the probability is actually less.
Right.
But if you sell options for 2%, the probability is very high.
Right.
And if you are selling option for 0.5%, it is not a worth business actually, then you can put your money in FD.
So talking about return on equity, just want to extend that point before I get to the other broader point, that how much a full-time trader should expect a return on equity per month and per year?
I would say actually you can expect 30% per annum.
30% per annum. So maybe there will be months where you make 5% per month. There will be bad months also. So if you look at on a quarterly basis, maybe 10%, 8 to 10% per quarter. Friends, we are talking about 30% per annum. So it's not per day or per week. It's per annum. That's a problem with the mindset of people, that they want return very fast, especially in options. With the onboard of weekly option, everyone has started considering weekly return for themselves, and they want 10% return on a week-on-week basis, which could be quite dangerous, isn't it?
Obviously it is dangerous.
Especially as a seller of the option, you will be taking an abnormal risk if you want 10% return per week. Jagan, going to the other side of the discussion, that sure, option selling is interesting, it needs a specific art and skill, but ultimately your strategy will start from a point where you decide what will happen to the market.
Correct.
And I guess that's where you use technical analysis as a tool to figure out what will happen in the market. So talk about that theory, how you have practiced technical and how you identify a trend in the market.
Generally, I don't use it for positional. Mainly, I use technical for intraday, and especially for the last 3 days. Tuesday, Wednesday, and Thursday, I use these technicals, and especially after post lunch, it is very powerful, because I predominantly trade in Bank Nifty. Bank Nifty is very famous to give a violent movement after lunch. You need to have a very light lunch. You should not sleep. Within 5 minutes, actually, it can go 500 points, 600 points without no news, nothing. Okay, so Bank Nifty is just for the namesake, it is index. Otherwise, it is a stock. So I use these technicals mainly for breakout, either in upside or downside. If there is a breakout, then I will do the adjustments or I will cut my positions.
Right. But what are the tools which you use in technical? Are you keeping it very simple, or you are also trying to complicate it by? Okay.
I predominantly use the ADX indicator.
Okay.
So this indicator is the only indicator I know actually. It's mainly to show the momentum. It's not the trend. Okay.
Right.
There are a lot of indicators available to show that trend. Even when your moving average crossover will tell you the trend. MACD also will tell you the trend.
Right.
But the thing is actually most violent movement will be shown by this ADX indicator.
Right.
So there is a book you can read, AD Excellence.
AD Excellence is the name of the book. Okay.
Actually. So you can read the 300 pages. It talks only about ADX.
Right. So because you are an option seller, you are more interested in measuring the momentum, right? Less on the trend. Is it so? No.
and people will say trend is my friend. Okay, but actually speaking, for option seller, the trend is the enemy.
Right.
Okay, so whether the trend follower may or may not know the trend, but option seller should know the trend, because that's where you are going to make a loss.
Right.
Okay, so in trending market, you need to cut your positions. There is a wrong assumption in option seller. Retail option selling. Most 99% of the retail people, they think that they can always defend the positions by adjustments. It is not really so. They think that actually even there is a 1000 points movement in Nifty, even 5000 points in Bank Nifty, you can adjust your position. It is not really so. There is a scenario wherein you need to cut your positions. So that scenario mainly because of that severe trending. So you should know the trend. So in order to know the trend, actually you need to follow the technique.
So when you say that there would be scenarios when you have to cut your position, and typically when people are selling options or buying options, they have this mindset that either I will invest that premium or I will eat that premium totally. That means you are saying that there should be a stop loss.
Absolutely.
So how do you put stop loss in options?
We can put stop loss.
I mean, what should be the theory? What should be the science? Typically people who trade in, I'm meeting so many people all around the country, and premium is such a thing where people say that, okay, I will invest, or okay, I will get that premium at home. People don't keep stop loss in premium. That's a principal problem. So what should be the science behind putting a stop loss in premium?
Very simple. So in option selling, the pop is very high, but doesn't mean that it is 100%. Okay, even you are 99% right, 1% you are going to be wrong. I know some people who sells option for 2 rupees, 3 rupees, one day they will get a blow. So there actually you need to stop trading. So you need to have a stop loss. Generally, say for example, if you get 2% ROI, that is a high probability trade. But if you are having 5% or 6% ROI, actually that will have a low probability trade. So very simple, if you are selling options for 2%, if it comes to 5 to 6%, say for example, you are selling options for 24 rupees in Nifty, which is 2%, right? If it comes to 72, 75, you need to cut it. Because if you sell options for 75 rupees, which means that actually you are expecting 5%, 6% ROI on the margin you are paying, which is highly dangerous. So you need to stop it.
So then stop loss could be actually reflected as a premium also.
Yes, absolutely.
And convert that into ROE.
True. Say for example, the market is not moving anywhere, but sometimes actually the market will not move anywhere. The VIX will increase, the volatility will increase. In such a cases, this 24 rupees may go to 72. That time also you need to exit.
So basically, friends, a random way of cutting an option is that I entered at 25, and the moment it comes to 35, I square it up. That's very random. But the way he is promoting is, or he is suggesting is, that look at the ROE. If at 40 ROE comes to 4%, that means there is a high risk. Do you want to carry that risk? I'm sure you would not like to take that kind of a risk, because your risk management or money management or capital allocation would not allow you to trade per trade for a 4%, 5% risk. So you better exit that trade. Right. So Jagan, out of say 10 trades, how many trades you think should be right trades and how many could be wrong trades?
Generally, actually, in option selling, 7 trades will pass.
Okay.
One trade will threaten you.
Right.
Okay, will go near to the stop loss. And one trade you can do the adjustments and try to come with no profit, no loss. Okay, one trade you need to stop.
And Jagan, if I want to ask you that you trade predominantly Bank Nifty, have you ever tried trading stock options?
No, I never tried. I tried in start of my career. Then I came to know that PR Sundar said actually don't trade in stock options. There are a lot of issues. Then I stopped it.
Right. And what about Nifty options?
Nifty options, I don't trade much actually, only 10% of my volume. I do predominantly with the Bank Nifty only.
Because of the volatility, you are comfortable?
Because of the volatility, because of the premium, the firefighting is better in Bank Nifty. Yeah, but the adjustments are very tough with the Nifty. Adjustments are easy with the Bank Nifty.
And do you also trade options of the major components of Bank Nifty to kind of hedge or de-hedge yourself? Only Bank Nifty. So you are kind of married with Bank Nifty. So what would you suggest for our users who are also Bank Nifty traders who want to aspire to get into Bank Nifty as their career?
I would say actually for the beginners you should not trade in Bank Nifty. For the beginners you should trade in Nifty and positional and monthly. Don't come to weekly. First you try in next month. Then you come to current month. Then you come to next week. Then you come to weekly.
Wow, fantastic. What a lovely and simple suggestion he has given to us.
Then you come to Bank Nifty.
Yeah. So Bank Nifty is, some people call it India's Bitcoin. It's too volatile for a weak heart to manage. Jagan, couple of last questions before we wrap up this video. If someone has to get inside the market and make a full-time career as a full-time trader, how long will it take to become confident about the market?
I think at least it takes 2 years of time consistent profit if you make,
Right.
and if you are getting more than double the salary of double the salary as a profit, then you can take a call.
Right. And so for these 2 years, you don't recommend people to leave their salary and join this market, do part-time?
Yeah, part time you can do, but don't leave the
But when you do part-time, you can't do intraday trading, then it has to be purely optional, position based.
Yeah, true. Intraday you can't do, but you can do Wednesday and Thursday after 2:30 you can do.
Okay.
Just 1 hour show.
I think a lot of software companies have they realized this Wednesday and Thursday from 2 to 3:30. No team member are going to work on their products. Which is fair because after all, software guys.
Because when I started, I was doing expiry trading from 2:30 to 3:30 for the initial 2 years.
Oh.
Because I did not get a time. So 1 hour only I do.
So that's also one theory, guys. You can adapt that from 2:30 to 3:30 expiry days or a 1 day before expiry. If you can allocate some time out of your full-time occupation for a period of 2 years, learn the art and science behind the market, behind the options trading. And once you are confident that you will make double of your monthly salary, that's the time you have to press the trigger that I can go ahead.
And very important thing, you need to have a stop loss for all the trade you are doing in intraday. It's very important. Even your expiry trade, and you need to have a stop loss.
Right.
If you are doing a positional trade, for every sell you have a buy, because positionally if there is a gap down, actually your stop loss will not work, right? So positionally you can't put a stop loss for the position. Right. So you need to have a buy option. For intraday, have a stop loss. It's very important.
Oh wow, Jagan, you are incredible. I mean, I'm meeting you after 2 years and I can see a different Jagan altogether. So I'm very happy and very glad that I recorded this video. Friends, I'm sure that you must have learned a lot of things from this video. We have tried to keep it very short, very crisp and very up to the point. And he's someone you should look at when you are building up your career as a full-time trader, especially if you come from the software background. Thank you, Jagan, for recording this video. It's a pleasure for me to come down to Chennai and record you, and I incidentally recorded Mr. Sundar video also. So I'm sure that my audience, especially the English-speaking audience, who have been after me to record an English video, they will be quite excited about this new video and they will be definitely helping us in our endeavor. So thank you for helping us in this endeavor. Very selfless exercise. Thank you for giving your time. Friends, this is me for this video. For the time being, I want to say bye to you, but before that, you know what to do. If you are not part of Villain Markets channel, you have to be part of this channel. We are doing something incredible, so there is no harm in becoming part of the channel. And anyway, there is no cost associated, so there is no reason why you should not be. Do press the bell icon, because that will suggest that someone is there on the door and you should open the door because the new video has arrived. And you can write comments. You can give comment to me, to Jagan. We'll make sure that we'll request Jagan to be active on his video and reply to your comments. If you want to criticize, go ahead. We love criticism because we are learners of market. No one of us says that we are expert of market. So do that and keep yourself safe. Look at the market very constructively, positively. Don't be in a hurry. Market is here. We all are here. We have a lot of time to make money. Give yourself a lot of time to absorb this market to the fullest. Stay safe. Have a great life ahead. Thank you for watching this video.